Hello traders, Gary Wagner here just after 10 o'clock in Honolulu, 4 o'clock in New York on Monday, the 16th day of March 2015, and this is the daily report for gold and silver. We have the equities markets back on fire, precious metals trading lower, oil taking more of a bath, and dollar remaining strong today. First to gold, currently trading 1154.88, puts it off about $4 on the day. It has had a high of 63.50 and a low of 1150.20. Silver, in essence, trading unchanged. Our current print is putting it down about a penny on the day. You can see this candle right in here. It's almost a pure doji. As it goes down, it turns red because it's down a penny, or up, it goes green because it's right at that opening mark at 1564, the low 1550, the high 1576. More on silver in a little bit. So traders, very, very interesting start of the week. Of course, the monthly FOMC meeting is set to kick off tomorrow and on Wednesday, and minutes to be reported following the conclusion of that meeting. The key is right now is pundits, analysts are all trying to figure out whether or not the Fed is going to use the word patience, because that particular word will signal exactly how soon or how long before the implementation of rate hikes. And therefore, the market is sitting with bated breath in terms of what they think the Fed might say. Now, there was some interesting economic data that came out that wasn't great in the market, and that in fact caused the market to move up, because what happened was the belief was, with the economic data not being that good, the Fed would take out the word patience. Interesting and odd philosophy behind what we're seeing. Anyways, what we are seeing is the S&P's finding some sort of support roughly at around this 23% retracement. I've got two different retracements here, but this is the large retracement. It's the most important of the two. Of course, 23%, that puts us right here. We can see, once again, we get these rounded tops in the S&Ps. We also get these rounded bottoms in the S&P. So whether or not we're seeing a bottom, that's something we'll have to see tomorrow, and most importantly, really on Wednesday. So traders, when we look at the dollar index, I've pulled up a weekly chart after the kinds of gains we saw. A little bit of backfill. Of course, this weekly chart on Monday, this particular candle right here is obviously showing us today's trading activity, and it is still trading above 100. And when you consider the kind of moves that it has already made this month, you see that when we go to this monthly chart, look at this here, we'll blow that up a little bit. When you see this kind of move that we've seen this month, this being the high and this is how much we've backed off of it, it really isn't that much. Dollar still impressive, dollar still very, very strong. And traders, talk about falling on a bed here. This is a crude oil chart. It's also a monthly. Any way we want to look at it, tremendous move down today, down now around 43.77. And when you consider the lows that we had back in 2009, there's two key points that I've always looked at. The first is right here at around 40, because that's genuinely the bottom of these bodies right in here. And then the second is going to be these lows that it hit right above 30. So there's a couple of really areas that we want to watch, and I'm going to bring this straight as I can. As you can see, we are right at the body area, really, of this fall that we had in 2009. Many didn't think we would get this low. I thought it would be a hard move to see it go this low, but lo and behold, this is what we're seeing in oil. We're seeing this complex break down completely, reminiscent really of what we saw back in 2008, 2009. Of course, the starting point was much lower, this being over 100, where this time it was over 140, but it looks as though the net result might in fact be the same. So traders, what does that mean for oil? Of course, we're currently sitting short a position just a little bit above this, call it 56. But the key mark that we're looking at right now to see if this market has any kind of ability to find support, or if we could see some sort of a dramatic sell-off in the market, I believe is this most recent low right now. This is 31. Now, we've broken below these lows at 61. Market's taken them out. Market's trading below that. You can see that on this 2-day chart, but it is still trading above these lows back in November of 31. And whereas I thought the market would break hard if it broke through this area, it's really just been kind of hanging around this area, which has given me some concern. At the same time, I do believe that the pressure in this market is definitively to the downside and not to the upside. I haven't seen any real concrete evidence of any kind of support in there. And these are the numbers that we want to watch. If the market can genuinely find some support, because it has hit these highs over these last couple of days of around 61, but it seems to be closing lower. And that tells me that now 61, 62 has become resistance in the market. And traders, when we look at our longer term studies, this of course being a weekly chart, we've absolutely broken below this critical area. And this is where we're putting it at 1157 on this 61% retracement. However, we've broken below here. We haven't seen the kind of follow through that I had hoped, but we are definitely below this point. So my sense is that we'll probably still see this market headed lower, but we haven't seen it break hard in the way I thought it might break. But nonetheless, it remains under pressure. And traders, lastly, in terms of the gold charts we're going to look at today, this is simply our daily chart. I draw your attention right now to the moving average convergence divergence, MACD as it's commonly called, and it is still breaking. You've got really the market moving apart, so you're getting a divergence. A divergence to me is going to tell us that we're looking at lower pricing ahead. And lastly, when we do look at the Japanese average charts, we do see these body sizes getting very, very small. That's the other thing that I've been looking at that we want to pay close attention to, because what we don't want sitting in a short position, obviously, is to see some kind of a turnaround. But we are seeing this market really beginning to consolidate, and you can see it consolidate before breaking again. In other words, you'll get periods of rest on the way up and a rest on the way down. So we do want to watch it closely, but really the important thing right now is the Fed meeting, which is scheduled to begin tomorrow. And traders, lastly, we are looking at our weekly chart of silver, this being the spot market. Of course, today is quiet and unchanged, so you get the small-bodied candle. But as I said before, I really don't see any real support in this market on a technical basis until we get to around 1510. Right in there, that's the bottoms right in here. And until that happens on a technical basis, I don't really see any strong support. We're still looking at resistance just above that. This is a very, very narrow range in silver that we're going to need to see it break one way or the other. And as I said, my sense is it will probably move in tandem with gold. This has been Gary Wagner, wishing you as always good trading. Talk to you tomorrow for another daily update and review. Bye-bye.